Tuesday, December 3rd, market analysis. Stan Ehrlich, good morning. A couple minutes after 10 o'clock California time. I always start out with the stock market indexes, daily and 1 minute or 2 or 5 minute short-term charts, and go to futures and sometimes some other things. At the end of this week, I'll be detailing the Santa Claus rally. There are 3 entry points, exact time of day and dates, and 3 exit points, exact time and dates. And I'll show you the track record for a couple of decades plus of the Santa Claus rally coming this Friday. Tune in. E-mini. Well, we're up a little bit, down a little bit, up a little bit, down a little bit. It's a very calm day. A doji inside, no higher highs, no lower lows than yesterday. Currently, as you can see, down a tick or something. Hardly. Unchanged. So, going no place fast. The 1 minute chart shows that we bounced back from a little bit of a dip. I want to go back to the daily real quick. You'll notice that we are, for the second day now, in new high historic ground for the ES, the E-mini futures contract. And this is a continuation, of course, the December plotting at the moment. And we're going to be changing to March, of course, fairly soon. It's automatic. So the new highs are holding. Plus, I've added to the indexes on the daily charts, all of them, the upward slanting, either a channel in one case or upward slanting wedge, which is a variation on a pennant formation. Let me detail that for you just for a moment here. For you people that are not particularly technically analysis or chart pattern versed, whoa, leave that alone. Okay, this is a normal pennant formation. Top line goes down, bottom line goes up over usually several weeks, if not many months. And they can be multiple years. But if you grab the end of it and drop it down a little bit, what have you got? You got a right triangle, a flat bottom right triangle. And if you just simply put the trend line on the bottom up sharply and the top is flat, you've got an upward slanted flat top right triangle. But when you start to get into this territory here, where both lines slant up or both lines slant down, no matter what the time frame, that's not necessarily important, then you're talking about an upward slanting wedge. They're all close cousins to a pennant formation. In fact, and I can't do it with this example, but if you had 2 parallel lines, and this is not quite parallel to the top line, you would have a channel. The key here is when you hit these lines, the market bounces off of them until finally it breaks out one way or the other. The direction of the breakout is typically what was the trend before the pattern started. And if it was an uptrend, which this has been, then the breakout would normally be on the upside. Problem with these upward slanted channels or upward slanted wedges, patterns that are generally speaking upward slanted are bearish in the end. They typically end up topping out the market and causing a decline, which could be a relatively short couple of 3-4 weeks, a month, maybe a half a year or more, maybe starting a longer term bear market. So any pattern that slants upwards, you should be a bit suspicious about failures when we make new highs. So far, this is good. Yesterday it did it, stayed there. Today it's holding, staying there. I don't see anything on the 1 minute chart to cause me to believe it's going to crash or anything. I will scream bloody murder when I think that, of course. But I've got to be neutral to bullish with caution because of these. Look at this upward slanted wedge in the spider. We're not at the top of it, so we could bump against the top, and it's getting higher and higher every day. Well, if you want detail, it's every minute, but whatever. And that allows for the bull trend to continue, obviously, until the bottom line is broken on a convincing, not just a couple of ticks, but a substantial basis, and probably for a day or two. Then you've got something more profound going down. And it's not happening. This stuff is strong, holding, continuing to make new high ground. Not even overbought necessarily. Now, we barely got overbought yesterday with an RSI of 75.04. Wow, barely overbought yesterday for the spiders. So the spider SPY has now a condition where all I need is a bearish engulfing, and I will have an ER sell signal that's going to turn red, like that one in there, and this, excuse me, and that one, those two, that one, frequently at highs or very close to downside turning points. Next chart. Okay, climbing still. Don't say anything bad about this. Frankly, I think it's going to make a new high before the end of the day. QQQ, pretty much the same thing and not overbought on the daily data. I watched the daily data overbought for longer term moves. Pardon my cough, doggone it. Now, I love the bearish engulfing, bullish engulfing combined with my custom relative strength index. Learned it from Wells Wilder himself in the 70s and 80s. Old friend of mine, I believe he's gone. Lived in New Zealand for the last couple of decades. Now, this is prime territory for a double top. Not happening yet. I said the same thing yesterday, but today's high is almost the same. So I'm watching very carefully for any failures here, any particular sharp big breaks that break previous lows, break support areas on a short-term basis, and would be signaling more weakness. Not getting it. Here we are, QQQ 1 minute looking good. Here we go. The NASDAQ NQ, double top potentials. Not overbought though. Now, like the last shoulder high on a head and shoulder top, those rallies don't often get overbought. The top, the head of the formation does, and the first shoulder may also. But there's not that big a rally usually on that last shoulder before everything goes to hell in a handbasket. Down. And it's just upside down flip flop for head and shoulder bottoms. They don't get oversold on the last shoulder frequently. So this double top may not get overbought on the second high, which we are basically at, like the last chart we looked at. And I'm just simply looking for any big failure all of a sudden. Next is the 1 minute chart, looking pretty good here. I don't mean to tell you to go short now, not at all. I just want to express some foresight, I hope. And I'm bullish. I like what I see. I wouldn't be getting out of longs. I'd be tightening my stops closer and looking for any sell signals. Next, YM. Now, this has been overbought for 5-6 days prior to today, and we see a new low for the past 3 days, and it is not really falling apart. It's now back up above the lows of the last 3 days at the moment. Down a little on the day, not a heck of a lot. I don't think this is looking bad. I think it could dribble off a little bit more. There seems to be a very small, tiny gap here from a few days ago to potentially close. But frankly, so far, I got nothing that says screaming bloody murder, sell short. Excuse me for that cough. Had it a few weeks now. We're looking at an upward slanting channel in this case. This is not a wedge. The lines are very close to being dead on parallel. They might be. I just filled that in this morning. Close enough. Looks like a channel to me. Bumped up against the top of the channel, overbought. Classic combination for a bit of a dip. Not a big bear move for weeks and weeks or months and months. Next, YM, detail, 1 minute. Yeah, looking a little weaker, but that's what I just said on the daily chart. Here we have an upper slanting channel almost, but the lines are not parallel. So eventually it comes to a tip way off into the future. Now, up against the resistance line, overbought condition, no surprise, we're dipping a little bit. And this is the Russell and the 1 minute on the Russell. Minor new lows, it's not falling apart. I don't see anything terrible at this moment. Now, it could develop into that. We got the ingredients to some extent for that to happen, but it's not happening yet. Bonds, love it. We got short around the top of the market back here in September because of the head and shoulder top formation I detailed day by day for you. The minimum downside objective was fulfilled very quickly, very easily, almost straight down. Market came down into what I had as a circular rectangle in October when I expected it to bottom out, and it turned out to be November 6th instead. Now with a minor double bottom because we have now closed above the highest high between the two lows, and there is a very minor double bottom breakout to the upside, which says we're going to go up maybe to 121, 121 and a half, a little more. But that's not the bigger picture. I think this November is the last shoulder, then the second shoulder, the outside shoulder on a double shoulder, head and shoulder bottom. Now, this is the inside shoulder, April 25. The head of the formation is always the lowest low, and you have a bullish engulfing buy signal. Yay. Glad to see that. October 23rd. Notice October and October. Well, almost November. Then we go back to the inside shoulder, March 2, 23, and October of 22 for a minor double bottom. Very interesting. Little double bottom back in October of 23, minor double bottom here in October, November of 24. Hey, symmetry. These patterns are symmetrical. Now, if you don't like the double shoulder jibber jabber, then we have a single shoulder in March of 23. The head of the formation is not changing, obviously. And you have a single shoulder on April 25. Therefore, the neckline is going to be this line, drawing off the same pivot point, down across the pivot point here, and it stopped, and it stopped. Finally, it broke out, tested support, made some significant progress on the upside objective on the single shoulder pattern, which is 140 almost. But the downside correction we seem to have just finished came right back to the neckline. Classic. Took a little longer than you would expect for the single shoulder pattern. Uh-oh. Now it kicks in a double shoulder concept, and the neckline on that pattern comes across this particular pivot point and not that pivot. So here you have an upside objective of 150. This is a long-term forecast. Interest rate futures bond, 10-year, 30-year long bond is going to go up to 150. I usually don't forecast out many, many months, if not maybe over a year. Notes, equivalent to the same thing, just different numbers. Same dates, formations, time frame, necklines, testing, everything, basically the same. Very little differences. The upside objective here for many months from now, 126 and a half-ish. Crude. Sideways, between a rock and a hard spot. Supports holding, bouncing a little today. I don't know. I'm going to have to wait a little bit until I get something to grab onto. RSI is very neutralish. Sideways, that's the best I can say for the moment. We've got the same damn thing for heating oil, although there was a significantly more bearish tilt to everything. So you got to be basically bearish, intermediate to longer term, but short term support's holding a little. Got a small bounce. Oh, maybe it'll come back up to 2.3, and I can't rule out 2.4, 2.43-ish. But I don't think that's going to change the trend longer term. So I'm neutral to confused. But yeah, maybe a little bit bounce because of support doing okay. Next, we've got the bottom of the market here on natural gas, but the rest of this is lows, a little rally, a lower low, no follow through, a little high, no follow through, a little bit lower low, no follow through, a little bit higher high, no follow through. It's a big sideways trading range getting wider and wider. Now, if this was at the top of a huge upside rally, I'd be talking something about a broadening top formation, and they're very rare. So we don't normally yik-yak about a 1, 2, 3, 4, 5 crash, and that would be a broadening top. But again, you'd have to have a big bull market before that happened, and we don't. So I'm neutral and a little bit bearish. We do have a trade still on the books from that sell signal right there on November 22nd. And the trade line is the little green line connecting the current tick, which is almost low and last. That trade is doing great. Our trailing stop is also always the little zigzag yellow line. That's a trailing stop for that particular trade that made some money. We lost a little on that one. We made very good money on this longer term one here. Made a little money on that one there also. So lately, strategy's been doing very well on natural gas. But no, past performance is not indicative of future results, and hypothetical returns have some inherent limitations. Said that a few thousand times. Gold. Maybe we have a head and shoulder top in gold, silver, and platinum, all three. I don't like the angle of the neckline, particularly gold. It's fairly sharply downward slanted. And yeah, I know you can always do that, and the angle won't be so bad. But nevertheless, I don't like the look of it. You do have a shoulder, you do have the head, you do have a shoulder, and it's a bearish engulfing on a big, big, big bearish engulfing on the high of the last shoulder. The rally may have already been over now for a day or two, and we may be about to start to slip to make minor new lows for a week or two, in which case I'm going to be a lot more aggressive about commenting about this possible head and shoulder top, because you did get overbought on the first shoulder and backed up. You did get overbought again on the head of the formation and backed up. And I just told you guys on the last shoulder, it doesn't necessarily get overbought because there's not that big of a rally relative to these other rallies. So it qualifies in that respect. The downside breakout would be something in the ballpark of, I don't know, 25.10 to 25.20 in the next week or two. But the downside objective on the pattern, if it breaks out in the next couple of weeks, would be down to, I'm going to just round it out down to 2,300 or lower, maybe down to the support area. Silver. Neckline. There's your shoulder, two parts to it. The head, sort of two parts to it. And the last shoulder, sort of two parts to it. Big bearish engulfing just before it started to head south. Now, it's rallying fairly nicely today at the moment, whereas gold is barely higher just by a little bit at the moment. Silver, on the other hand, is above the highest highs for the last previous 5 days. Still not that big a deal. It came very close to breaking the neckline a few days ago, right around Thanksgiving, just before. So the downside objective on this pattern, if it works, and again, I'm a little skeptical because of the angle of the neckline, but that's about the only thing that's wrong. We almost had a bearish engulfing on the very top of the market. You got to realize, I think those two ticks are exactly the same. So no engulfing, missed by a tick. Downside objective, little under 25.000. Yep. Next. Also platinum. I think this could be the double shoulder or combination shoulder. There's the pivot point. There's your top, and we got a bearish engulfing on platinum at the top. Perfect. Great. Neckline slanted downward a little more than I'd like. It did hold on this last dip down, and we're bouncing like silver somewhat. So maybe the pattern's not going to work. If this rally keeps on going, it'll start to extend the shoulder too far into the future and or go too high, and that'll kill the pattern. If we start to see it slip right down in the next few days and head south, then your pattern is still very much intact. Next, copper. Nice rally today. Support is holding in general. Looking for a little bit more of a rally now that we've bounced up like this. I probably didn't say that yesterday because of the new lows for weeks. That wasn't good. So we're still short, though, I might add, from an ER3 signal and a fill on the October 2nd date. Right around the price of 4.7, give or take a little. And our stop at the moment is 4.3. So Maybe we're going to take a really nice, great profit. It's been a couple of months trade. Next, we've got this downward slanting channel for quite a bit of time in soybeans. The major bear trend line across the top, we're not even close to, and we're nowhere near the bottom of the channel either, somewhat in the middle. Support has proven itself extremely nicely since it bottomed out October 18th or 17th. Almost the exact same lows a few times. But I don't think it's going to hold. I think in this week, probably, we're going to see it drop below the support level and head south substantially when it starts to close below 975. Could be any time now. We are short from 1115 on an ER3 position trade. The buy stop is still up here. Now that's not protecting a profit yet, and I probably should drop it down to at least a break even, if not a little lower, meaning we didn't get stopped out today if I had done it earlier. And as long as today's high stays, I might do that for tomorrow. But I don't like taking a loss on a trade that I had a profit in. It wasn't huge, but a profit. So I'm bearish, looking for these lows to get broken. I have been in the past weeks and months trying to justify a long-term bull trend starting in grains. That all fizzled away a month or two ago when we started to drop off too much. And now I'm just looking for new lows. I'm already short at the moment, so that would be great. Soybean oil, same kind of story. Bearish engulfing on the top of the rally. I scream bloody murder. I know it on 11:11 or 11:12. It might not have happened by the time my YouTubers recorded. It could have happened after that, before the close, and then I'd talk about it the next day. Anyway, we got oversold lately, bounced a little bit resistance, and now just kind of fiddling around here. I do have to comment that this approximate 40 to 41, well, I can even be more accurate, 40.50 to 41, has been holding extremely well since April. There is this 2-month period where we were below it, but we never had any follow through, and then we went all the way to new highs for 6 months or so, and we came down again to the same levels lately. This is how a last shoulder on a very sloppy, multiple shoulder bottom could form, and the neckline I've already drawn in inadvertently because it is a bullish resistance line. And maybe I did that because I thought maybe it was a neckline. But anyway, yeah, there's chances here, but I'm premature. I'm going to say maybe a small bounce, but I'm looking for new lows. Meal, you're looking at the support level, like beans. Okay, for a few days here. I think it's going to get broken. And when that happens, it's going to break into new lows for a long period of time, multiple years. And I think it's going to happen very soon. Next, corn. Resistance stopped the rally in an overbought position or situation, that is, November 8th. We do have a possible bottom, but for the last week or maybe week and a half, I've been mentioning I don't want to go sideways, and I didn't want it to go back down. The more sideways, the more likely the pattern's not good. The last shoulders are typically not real fat and sideways. This should have been a rally that broke the neckline and went up and up and up. It didn't. It came right back down, made a minor new low just a few days ago, and it's bouncing a little bit, currently down slightly on the day. But resistance. I think it's going to make new lows again. And if it does make lows lower than 425, I'll probably remove these markers for the head and the shoulder pattern as well as the neckline, but not yet. Wheat, broad double bottom, maybe. Not acting good, not acting strong enough. I may be premature. I'm not recommending any buy yet. There's no outside up day bullish engulfing green like there was on the bottom back here to the exact day. You guys know that have been following me for a long time that I don't BS about this stuff. I call it when I see it when it happens. So I don't have a signal. I got some conditions that I like to see at support, oversold. But, where's my rally? Not yet. Okay, what about cattle? Sideways, trend is basically up. You got massive resistance stopping the move. We almost had a signal smack dab at the top of the market, which was October 29th, but we were missing the overbought condition. Otherwise, it would have been red. So I'm neutral to bullish, but I got to have an upside breakout above 191 and a half, let's say. You start closing above 191 and a half, you're going to have another big move up, probably the 200 plus easily. Next, hogs. A new high a couple of days ago in overbought condition, up against and a little bit above a previous bullish resistance line, which is now the fourth point, basically, on that line. And we're trying to do it again. We can't seem to stay above that line. Second time in the last few days, we got above it. And now it's trading back down to about unchanged, a little lower. It's not overbought at the moment, but if we do have a bearish engulfing, I will get a red sell signal, but it doesn't look like it's that weak and not going to get below yesterday's low. But if we did, I will have a red bearish engulfing sell signal today. But it's not happening yet. But it looks like it's topping out. I'll go for a little bit of a break back to this bull trend line, back to 85.20 in the next few days. Now I've got that one stock that I've been following for a few weeks now, and so far my comments have been good. This is a longer term, major, huge 2-year breakout with a minimum vertical distance, bottom to top trading range, upside objective of 134, let's call it 135, 133. And we have a new high for the trend today. But that looks to me like it's just a start. I would expect 150, and I can't rule out 190, and hell, I can't rule out 300. This is a very large 2-year long-term bottom. Complex has characteristics that I like quite a bit. Won't go into it right now, but my confidence scale wise is pretty high on my scale. I'd be buying breaks, probably now long-term investors, all the way down to say 75, 93 at the moment. But I don't think that's going to happen. I think you're going to stay here. I think you might close here. I think you might make new highs this week. Again, sugar, skip, having trouble with New York markets. Back to the E-mini, currently down very, very slightly. And we're going to take a peek at the 1-minute chart for the last time. It's been moving up a little. Well, I'm yakety yakking. You guys have a great day and profitable trading to you.